Hello to everyone listening and a very warm welcome to this episode 1 of a Hedge Fund Huddle. My name is Jamie McDonald and I was a hedge fund manager at SAC Capital, now Point72, for many years, both in London and New York. Now, here I am working with the fine people at Definitive, a London Stock Exchange Group business, helping to put together useful, relevant, and dare I say it, fun content that can be enjoyed by experts and newcomers alike. So each episode in this series is going to uncover some area of the hedge fund world that we hope you find interesting, because for far too long, hedge funds have lived under this veil of mystery. And today, we begin to demystify each part by peeling back the onion and seeing what's really going on behind the scenes. Now, today, I am delighted to have on the show two ex-co-workers, colleagues, and friends, Romael and Alistair, who will introduce themselves shortly. And today we are going to be turning hedge fund content on its head. We're not here to necessarily brag about our victories. This episode is to find out what happened when Harmonic Capital, the hedge fund that Alistair and Romael were running together, had to close its doors and return money back to investors. A very difficult thing to do. So what happened? What went wrong? And what lessons did you learn? Well, let's find out now as we welcome Romael and Alistair to the show. Romael and Alistair, welcome.
Hi, Jamie.
Hi, Jamie. Thanks for having us on.
Great to have you on. So, Romael, let's start straight away with you. Could you just give us a bit of background about yourself, but up until the point where you decided to take over Harmonic?
Sure. So, Romael Karam, I'd spent a large part of the last 24 years of my career in the buy side and predominantly in trading. My career started in 1998 as a small futures and options broker. I then had a 3-year stint at Man Investment Products working for one of their incubator funds before I joined Harmonic Capital in 2003. I was a junior trader there. When I first joined, I think I was employee number 4 or 5. I basically grew with the fund. I took on new challenges as years went on. I embraced the electronification of markets. I'm kind of that old. I developed a range of tools to make our trading and functions more efficient. And away from trading, really, I saw Harmonic as my baby also, even though I wasn't a partner. So I got increasingly more involved in other areas of the business. And so basically over the 14 years I was there, I grew from a junior trader to senior trader to head of trading to partner. And then in 2015, I was working very closely with the CEO at the time. One thing led to another. And I led the 5 other partners through a management buyout. And as a consequence, for my sins, I was appointed CEO in 2016. In terms of highlights, really for me, it was the personal growth. Throughout my time at Harmonic, I was continuously learning, growing, developing, and I enjoyed every last minute of my time there, even through the really challenging times, which led to its closure in 2018. But I'd say one of the kind of my fondest memories of my time at Harmonic is basically working with the phenomenal individuals. The team we built there was really something else, super driven, professional, unbelievably loyal. And really, it was nothing but a pleasure to work with the team that we built there.
Well, before we go on to Alistair, what's incredible from what you just said is that you do have such fond memories of being there. So you must have had a great amount of respect for the people that you work with.
Yeah, absolutely. Like I said, I went from junior trader, learning from the people around me, and we all added a certain something to the pot, really. And every single person was just super, super loyal, even through the toughest of times. Even at the brink of knowing that it was, we're not going to really make it much further. There were people giving up their weekends, sleeping on the floor to make technology work, just to keep giving us a chance. And it wasn't that dire. I'm probably painting a very dire picture, but I'm trying to show the loyalty that we'd kind of created from the individuals that we hired. And that was by far, I think, the biggest positive I've had and I'll take forward in my career is working with those phenomenal individuals.
Well, we're going to dig into the journey of Harmonic in a second. But Alistair, if you wouldn't mind just introducing yourself, a bit of a background about how you got into this world. And as I say, up until the point where you were running the ship at Harmonic.
Well, I'm Alastair Smith. I'm Managing Director at Advent Capital, the specialist fixed income manager based in New York and London. I'm responsible for business development in the UK and Europe. I started my career many years ago in 1992 working for the Man Group. And since then, I've worked for various different institutional money management firms, one being Man for many years in London and Switzerland, but also for Polar Capital, Aspect Capital, and a few other really great firms. And I landed at Harmonic Capital in 2010, there to lead their distribution and to grow their institutional clients. That was our focus. I would mirror much of all of what Romael said in relation to the team there and the individuals. And I'd also say that we had the support of some fantastic clients, a really varied group of international clients that really helped us in the good times and the harder times. And we really saw it as a partnership working with them. And even when we came to decide to close the business, up until that point, they were super supportive. And I feel that is probably one of the most important things, seeing your clients as a partner in your success rather than perhaps as just a source of revenue. And that's what I've carried on through Harmonic and through on to Advent Capital as well. And I should just actually say, maybe people don't know Advent Capital as a firm, but it's a specialist fixed income manager. And we are very well known for our convertible bond strategies, long only and convertible arbitrage. So I've moved from the world of quant to the world of convertibles, which has, again, been interesting. And one of the fantastic things about this business is that you can move from one thing to the other.
Well, Alistair, if we can stick with you then, you say move from quant to the fixed income world now. So what was the business model of Harmonic, prior to 2016, prior to the mid-2010s? And how was money raised? You talk about your clients. If you could talk a little bit more in depth about who exactly the clients were, what relationship Harmonic had with its clients. Was there an IR? Was there a full sales team?
Certainly. So up until I joined, there had been one salesperson at Harmonic. This is in 2010. I joined with the ambition of growing out a team and the support of growing out a team. And through time, we did do that. We had a small team of additional salespeople and investor relations. So in the end, it's sort of a team of sort of 3 or 4. And that is an important takeaway. Sometimes sales and marketing and business development is seen as an afterthought. Build it and they will come. And I really don't think that. No other real businesses really run themselves in that way. Clearly, if you have absolutely fantastic performance and you just make money year in, year out, then they will come. But there are very few managers that achieve that. And it's certainly not a strategy to set out to believe that you will make money day in and day out. So if you're going to be realistic, then you do really need to be realistic about the different types of people and skills you need to develop a stable business with multiple clients.
Now, from what I understand I was a portfolio manager, so I was, just trying to run the portfolio myself. I wasn't so much involved in like the risk management and business building of the side of hedge funds. So, how do you go to accumulating assets? Because I think, from what I understand, it matters a lot about liquidity. It's like, when do investors have the opportunity to exit? How do you keep investors? The larger drawdowns, obviously, it can be very painful in terms of people pulling their money out. So what was the sort of business model to try and keep returns at a very constant, but sort of obviously growing pace?
That's a big question. How do you raise money and how do you succeed in that? I will give a quick answer to that, but happy to expand on it in time. It does very much depend on the stage you are in your business. So if you're starting out, say you have friends and family, and now you're really trying to get going, and that's so much the case for many aspiring managers. There are different challenges. I think at that point it's about leveraging existing relationships and making the most of what you have. Everyone has a lot more in the way of relationships than they believe they have. You just look at your LinkedIn and use that. That's a very powerful tool. I will also say one other thing that everyone should do, and that is invest in a decent CRM system right from the beginning. Do not put your stuff on an Excel sheet and think that's going to be that's a good idea. I was looking at how much a CRM system costs. Microsoft offer Microsoft Dynamic for $100 a month. And I think we can, most people should afford that, and they should do it and they use it, because, and I don't need to tell you why a CRM system is important here, but it really is important, and it shouldn't be overlooked from the very, very beginning. And then as you go through your phases of development, as you reach various milestones, so people talk about $100 million and grow on that, then you sort of progress to sort of different types of marketing. You might hire people, you might go after an institutional client. But at the beginning, you're really looking to leverage existing relationships. I think that's the absolute key thing to do there. And also look to the support of your brokers. So for example, your cap intro team, there'll be the bank or whoever you work with will have people that help you. They won't bring clients to you and then say, here you go, but they will really tell you where you're going right and where you're going wrong, and listen to what they say. They've seen successes and failures themselves, the brokers. You should be asking them what you should be doing, and they will have a pretty good idea. Is that a good sort of summary?
I think it's not only a good summary about starting your own financial business. It was a good summary for anyone who wants to start any business. So many people out there are looking to start their own businesses, and it's, how do I raise money? How do I maintain good relationships with my first few customers or clients? And I think what you just said makes a total amount of sense.
I'd add one obvious thing, and it might be obvious to some, but I guess the nature of this podcast, anybody can listen to it. Could be giving guidance to many. And I speak to an awful lot of managers who are trading crypto, for example, who are kind of not really in the traditional finance space, more crypto native, and is verifiable track record. So Alistair mentioned the CRM in terms of your sales process. But really, the moment you start trading, you want that track record to start printing and recording, so that when you are 3 years down the line and you've got some good P&L to show, that you can prove that. And that's going to help tremendously when your seed capital isn't so easy to raise, accelerator capital isn't so easy to raise. These are all topics that, I'm not going to pretend I know much about those, but Alistair's the expert there. But it's got increasingly harder to seed. It's got increasingly harder to get accelerator capital. And it comes with a lot more caveats now. But having that track record, that's going to be your real shop window to kind of getting on that trajectory to raise assets.
Yeah, I think that's right for anyone out there who's got their own portfolio now. Is just to keep a record of exactly how your performance has gone. Why did you go through periods which were difficult? Why did some things work? And just make sure you keep and document it well, because, even when I was at SAC, they had junior portfolio managers. They would give them dummy money or dummy portfolios. Build up a track record, build a level of confidence before you start trading the bigger numbers. So, Romael, I did want to ask, moving forward to the day itself, when I think, as you told me before, you went out for a coffee and thinking that maybe it would be crazy to buy the company out and get together. But then you came back and thought it was a great idea. So why don't you talk me through your thought process there?
Yeah, so it was actually Alistair's fault. So we sat around a table and we had just basically, this is a point I wanted to raise later, maybe is succession planning, but we were going through a long process planning the succession of our CIO.
Can you just remind me, who was it? It was David and Richard that started the company in 2002.
Yeah, so the three people that launched the business was Richard Noble, I think he left in 2006, Richard Conyers, ex-Aspect Capital, and David Pendlebury as well was also ex-Aspect Capital. Richard was the CIO, sat over that responsibility right through to 2015. During the last years there, he was less engaged in the day-to-day and had kind of handed over the day-to-day running to the investment team. But we realized, and through our COO leaving in 2014, I went around the business and had some meetings with the partners and said, hey, do you really want me to be COO? I mean, the head of trading, I don't really want to do the COO role. It doesn't really excite me. But I'd do anything for the business, right? And then every conversation turned to, there's no problem. We will support you on that, Romael. But one of the biggest problems is Richard isn't full-time any longer, and that can only last for a certain period of time. And so that was the repeated conversation over and over again. And so then it was left to me, I don't know why I always get the short straw, to go and speak to Richard and say, hey, what's your intentions? His response was, I don't ask you what your intentions are from one day to another. You're employed here. You just get on with it. So why should I respond to you? I tell you what my intentions are. I'm like, well, slightly different because we're fully vested in this and it's our livelihood. You've done all right and we'd like to do all right too. Cut a long story short, we put a succession plan together for him. And then one day, David came to us and I was working very closely with him. He didn't speak to me personally. He called us all into a meeting room and I'm like, what's going on? And he said, we've decided to close the business because, I quite like that Richard's leaving and I fancy a bit of that too. And so we're going to close the business. And at that stage, we were actually managing money for some high profile clients and turning over a decent profit. And it just didn't make any sense. And everyone left the meeting room, all the partners left the meeting room. And I sat down to Dave and I said, Dave, are you serious? Like, is there something else? Like, Yeah, is it your health? What's going on? He said, no, just I don't have it in me to kind of step up to the energy that you guys have got with Richard leaving. He's been my right-hand man, started the business together. I kind of want to close it together. Well, got to respect that. So Alistair and I went for a coffee, and I thought, well, that's just absolutely, what am I going to say to my wife? I need to look for a job. And everyone was like devastated. And Alistair said, we should buy the business. I'm like, don't be nuts. Because yeah, we can do it. And Alistair's insanely optimistic, which is fantastic. And he was right. So after just one coffee, I'm like, yeah, actually, that's a good idea. So we called everyone back to the boardroom. We had a partners meeting between the 6 of us. And we said, yeah, how about we buy the business? And everyone thought we were nuts and then slept on it. And then less people thought we were nuts. Some people bought into it. And it took about, I'd say, a week to convince everybody. And I think that was one of the first mistakes, right? Is convincing everybody. There was, I don't want to name names, but there was individuals, one in particular, possibly two, that had cold feet about the idea, weren't feeling very enthusiastic. And I don't think they really had the appetite for the risk that they were about to take on in terms of running their own business. So that was it. And then we had a long, protracted negotiation, which lasted about 6 months. And, we had about 10 weeks in the boardroom with the staff sitting outside thinking, what on earth is going on? And that's another lesson learned. One of the biggest risks to the business at that time, and which we were knowingly taking, is basically unsettling clients, unsettling staff.
It's disruptive.
Yeah, very disruptive. So if I had my time again, I would make sure that doesn't happen. And then we finally reached an agreement, and then it got a bit nasty, as it does in these things. But 6 months later, we finally got it over the line in December, just in time for Christmas. We got it over the line, signed the deal, and we were about, I think, 3% from high water mark at that time. Had a massive bounce back into year end, closed the year, I think 1 or 2% up on the year, new high water mark, did cartwheels, had a phenomenal first 2 months, like literally printing good performance. I turned around to the team. I said, listen, guys, just brace yourselves, because this doesn't happen. This is a purple patch if I've ever seen one. You don't just buy a business and make great profits and pay yourself straight away and be able to share bonuses. So just brace yourself. There's going to be a long winter coming.
At that point, how did you allocate responsibilities? How did you decide who did what? Because you do need, from what I understand about the structure of a hedge fund, you do need a CEO. You need someone who's a CIO, who's deciding like exactly where the capital's going. You need someone doing the operations of day to day. How did you divide up who did what? And did you feel that you needed to hire new people in? And all the time, you're still trying to run a business. It's not like you can pause the business for a few months while you sort this out. I'm assuming the whole time the funds were still grinding along.
Yeah. So the investment side of the business was taken care of in that 3 of the partners were on the investment team.
Okay.
So the CIO and 2 other partners were on the investment team. So that was already partitioned to one side. The other partner was head of technology. So all the tech stack, all the development of our models, we're fully quant systematic. We didn't really explain that, but we're fully systematic shop. So computer driven. And so all of that was taken care of in combination with the head of technology and the CIO's team, right? And then Alistair ran sales and relationship management. And then I looked over, we had a very capable head of trading who replaced me, who was also with the business for a long time. In operations, we had a very capable head of operations who worked for the business, I think, almost as long as I did, joined about a year after. And then a head of finance and head of compliance were, again, very capable people. Prior to actually the buyout, we did actually hire a COO. So we felt that we needed to fill the gap of hiring a COO. And we were doing that because we just felt you need to have a COO. And we weren't driven enough to make a decision on actually choosing somebody who should have been, would have been more than capable of doing it. We hired the wrong person. He was actually a very able person, but he came in and realized that he's leading ops, he's leading legal and compliance, and he's leading finance. And between the 3 of those individuals that he was leading, they were all super capable, and there wasn't really much left for him to do. So it wasn't much of a role for him. So what was actually really detrimental was the fact that we hired someone, paid all the money for hiring fees, paid a salary for 3 months, and then he resigned after the 3 months were over. And that cost us. It cost us money, but also cost us a bit of respect with our clients, because we had to put our hands up and say we made the wrong decision. Now, most clients are actually very understanding, and when you come out with it and say, look, we felt we needed this person, but actually we don't because everyone's capable enough. Okay, fine. They knew our business pretty well, but the advice that we got from them was, in future, make the right decision for the business. Right? You know your business better than anybody else does. Don't just kind of do a box ticking exercise, which I think we were guilty of.
So, Romael, you spoke about that the start of your run post taking over the company. As you look back, you called it a purple patch, but to what extent was it luck, and to what extent was it skill?
It was a lucky period in time, and so it wasn't down to any one of our abilities that we managed to make money during that period. So it was fortunate. I wouldn't say it was lucky. It was just fortunate that performance came in around that time. And one of the important things is that we'd actually decided that we had a 2-year runway before we saw that purple patch. So we said, okay, we're in this for 2 years. So if we don't make any performance fees for 2 years, we're good. So we made performance fees. So I thought, okay, cool. That 2 years should now be extended because we've made some money, right? That didn't happen. And I think people got carried away with the fact that they made a profit. And it's like any trade, right? You're in the money now. Do I close out this trade because I've made some money? Or do I carry on? Now I'm losing money. So yes, it was fortunate, and we should have seen that as a fortunate run, but we shouldn't be deluded into thinking that, we were great money managers at that time, and that the worst, there's going to be tough periods ahead. And we weren't really prepared for that challenge, if I'm honest. Now, none of us were. And it's all easy to run a business whilst you're doing high fives and you're printing performance fees. But when the proverbial hits the fan, that's when everything gets questioned. That's when Alistair's sales efforts gets questioned. That's when Romael's CEO efforts get questioned. That's when the investment team, do you really believe in what you're doing? The odd thing was, we believed in the investment team's ability more than, dare I say it, they did themselves at that time. I'm sure they're all very capable now, and they've all gone onto great jobs. But at that time, given the mix of where we were, given the fact that we'd just gone through a buyout, given the fact they had their livelihood on the line, I think they didn't believe in themselves. And that's a lesson learned in terms of, you weren't a great money manager in January. You're just fortunate. Going forward, you've got to knuckle down and you've got to keep developing. It's like a sales pipeline. Alistair can't survive on his selling on just the people that he has in his funnel today. He's got to develop more conversations for years ahead, months ahead. Similarly with systematic investing, your models today may perform today, or they may have performed in back testing, but they may break down as the interest rate environment changes, as we're seeing today, right? Those models may not perform. And so you've got to be coming out with new ideas, look at new asset classes, look at different asset classes that we've not traded before. We never traded equities, for instance. We didn't trade anything in options. So, look at other things that we can apply our knowledge and our expertise to, because you're not always going to be lucky. The models aren't, a silver bullet. They're not always going to make money.
Yeah, I mean, beware of complacency for sure. But on the flip side, when you are having a rough time, just know that there will be an element of bad luck in there as well. And that, as my old partner, Andy Billy, used to say, the one thing you always know about luck, it's going to change.
Shall I just make a point there that I think Romael said that was interesting, is that about giving clients bad news. You feel you shouldn't do that because it's bad. But my experience is that most investors, most clients will take bad news so long as it's communicated clearly and there's a reason for it. And in fact, they'll typically say to you, well, what did you learn from that? What are you doing to put that in, that wrong in right? And it's you sort of agonize over the bad news, but actually it's much better sharing it, and clients are much more forgiving than you think they would be. And for good reason. They want you to succeed as well.
Well, Alistair, why don't we talk a bit more about that? So during that period of transition, I assume you were headlining the conversations with most of the clients, both institution and private or whatever. So what were those conversations like? How much convincing did they need to keep their money in? What was that narrative like?
It's fairly straightforward. It's a bit like bad news. You just constantly give good, clear communication to investors as to what you're planning to do. And if you change a plan, explain why you've changed it and what you're going to do in the future. People agonize a little bit more than they should do over that. As long as you're clear, and as long as you have the trust of your clients, you'll be absolutely fine by that. They trust you to do the best for them. it's not as complicated or as difficult as people think it is.
Yeah, it just strikes me. I mean, I obviously worked at a firm under Steve Kern where the head man was very much the brand. And I remember when we were there, I don't know, it sounds like it was a slightly different situation. Like if he left, what are investors going to do? He was so much a part of the fabric. That's why he wasn't CEO. We had somebody else who just ran everything about that. He was just focused on the trading. I mean, some of these other companies, like the Elon Musk of this world at Tesla, there's so much risk. If these people at the top become too much of the brand, the biggest risk, which is, what happened is the guys at the top suddenly decide they don't want to do it anymore. And then what do you do? So how do you speak to investors and say, well, how is this not going to happen again? Or do you need to try and convince clients and say, okay, well, we're going to at least instill a management team that's going to continue to run operations?
To answer that, it is about processes and how strong is your business and have you demonstrated good processes before the person announced that they want to leave, and can you demonstrate at the point of leave, and can you demonstrate them going forward? If it's just I wake up in the morning and I chew my pen and look at my screen and then I decide what to buy or sell, then no, people are going to be worried about that. So with Harmonic Capital, it was a systematic, process-driven firm, as Romael has mentioned. But other firms, even fundamentally or discretionary built firms, driven firms, can still show a strong process. And I would say that the similarity there might be when Steve Jobs died and left Apple. It was clearly a company that was very well run, had strong people in it and processes. And of course, there was some, well, let's wait and see. But generally speaking, people continue to support the firm.
So Alistair, I mean, during that period, what was life like for you, and what are the lessons you've learned more on the sales side of things?
I mean, I think you're there as a team, so you'll do your piece, and you want your colleagues to do their piece. If you see what I mean?
I think the question is, was everyone doing their bit?
No, you see, people get distracted, I think, is what happens. Everyone thinks they can do sales and marketing. How hard is it? You just pick up a pitch book and you just talk to it. You tell the person what's going on. And of course, it's not like that at all. And there's a process to it. And you're not just telling people, you're trying to bring them into partnership with you. So I think that many people in the team got distracted, not just in my area, but in other areas. And so I think one of the failures of Harmonic was not focusing on the primary purpose, and that is to make money. And I think that would be my big words to anyone starting this firm. You are there, you're an absolute return manager. You're there to make money. And that should be your beginning, middle, and end, and not to be distracted and get other people to do things if that's going to distract you from your main task. And I think we saw a little bit too much of that. I also think that you need to adapt as well. You know what you're good at. You've spent maybe 10 or 20 years developing that. And then you think you're going to exercise that as your own firm. And that you must do, but you must also learn to adapt. So if other opportunities come along, so fast trading opportunities or new markets come along, you must have the courage of your own convictions to pursue those opportunities, those profit opportunities. And I looked at Advent Capital, where we specialize in convertible bonds, and our founder and CIO, Tracy Maitland, he has an absolute dedication to doing the best and making money for our clients. And I really learned from him and our firm and see perhaps where we went wrong with Harmonic Capital.
One thing you said, Alistair, there, which Romael, I'd love to ask you, is when it comes to outsourcing, how do you know what to outsource and what not to outsource? How do you balance that decision?
Look, I think the first thing I'd say is the opportunity for outsourcing has moved on a great deal over the years, right? So we're talking back, if we look back 10 years ago, an investor would want to come in and see a 10-year lease to make sure that you're not going anywhere. Whereas now, working in a serviced office is totally fine. And then, if you're just starting out, do you need to hire a very expensive compliance person or a very expensive COO? Is that the best place to spend your money? Or do you need a part-time resource? And there's lots of, businesses out there that are providing this. And then in tech stack, especially, that's moved on a great deal. Gone are the days when Cantab would parade their clients through the office to see all the flashing lights, right? Everyone aspired, I want a room full of flashing lights. So
the ticker tape going across the ceiling, yeah.
Yeah. Gone are those days, right? And as now, you can put so much into the cloud, and it's more efficient. It's actually a better use of your capital in terms of your own personal money, not to buy all these servers and have them sitting there redundant. Use what you need. And so you got all that, and it just makes sense. It allows you to be nimble. And then a lot of the solutions that you might use. So Harmonic, at one stage, we kind of started describing ourselves more of a technology firm than a hedge fund, which was a clear example of the distraction, right? We started out to manage money and make money for clients, not to become a technology firm. And so, being proud of all the tech that we built was one thing. It was great and it was impressive to clients, but that's not going to raise more money. That's not going to get the investment in. It's not going to double the allocation to us. What's going to do that is running the money well, focusing our efforts on the right things, and turning over a profit, making alpha.
So Romael, a bit of a private question, but during that time period, with more responsibility comes greater expectation, comes greater stress, I imagine. How did you cope with that? Whether it's like balancing private life and work life, were there moments where you thought the stress is getting too much, and how do you sort of cope with it?
I'll tell you what, he shouted at everyone all the time.
That's not true. I did actually shout at Alistair once. But
tell you what, he never did that. He never shouted at anyone. That's a joke, by the way. It was very calm, really superbly calm, I would say.
I have to say, right, it's kind of a bit of a personal story, and kind of, we can edit it later if it doesn't suit. But I actually didn't feel stressed at all. I actually really genuinely enjoyed every last bit of it. I remember on a Sunday evening receiving a text from one of the partners. So that week we were about to decide what we were going to do, if we're going to close the business or not. And it wasn't closing the business. It was, are we going to call investors and say, hey, we're returning your money, which is just a very embarrassing thing to do, right? Unless you're just running your own PA account, which is a good reason to do that. But we weren't doing that. We were failing, and we were going to tell clients that, we're not going to stick it out through the drawdown that we've given you and try to recover your losses. We're going to hand the money back, right? And that's giving up, right? And on the Sunday night, I received a text from one of the partners saying that I'm resigning now. I don't want to be part of the decision-making process. I'm like, how does that make any sense? You're still on the hook financially. What are you doing? And even through that, that's just emotions. Don't take it personally, but even through that, I was really looking forward to going into the office on Monday morning, just to kind of say, what's the next challenge that we're going to overcome? And I just think personally myself, I ended up having this insane bounce back ability. I remember, again, another different individual resigning several times. Once I was in Peppa Pig World with my daughter. He's resigning as I'm riding some dinosaur. Another time I'm leaving the office, he's resigning. By the time I go to M&S to pick up my dinner and I'm coming back to the station, I've bounced back. I'm thinking there's a way through this. So I really genuinely enjoyed that. I don't know why.
My question is, how do you do it? Because me personally, I'm not taking a personal financial hit. And let's say you've got your savings, whatever it is, and half of them are wiped out. It sounds like you're someone who can wake up the next day and go, right, how do I make them back? But I don't think everyone can do that.
Not everyone can. And that's one of the things
that you need to be able to do if you're going to go into this world.
I think you've got to find the right partners, right? That's really important. And I wouldn't say it's right to have everybody like me, because that would just be insane. And you can't have a whole bunch of super optimistic people. Some people are going to look at it in a different way. And we did have a good balance, but ultimately the balance didn't work because risk appetite diverged massively. And that was what broke the back of the business, is that we couldn't really see eye to eye. And it may be my failings as kind of the CEO. I wasn't experienced enough to lead a team in that way, or it could have been lots of different things. And I'll take some responsibility for that. And if I had my time now, having kind of experienced other things, maybe a bit harder. I was trying to please a lot of people.
Well, this is, if I may interrupt, this is my question to you both now, is as you look back, what would you have done differently?
First thing I would do is when we were discussing the management buyout, there was, like I said, one or two individuals that I would let them make a decision. And if they wanted to not be part of it, that'd be fine. I would sacrifice some of our own personal money to pay them a salary and stay, but not be part of the partnership. That's the first thing. Second thing is, and we should have learned this from the first point, when Richard and Dave left, your gut feel is that this business can't survive without people who created it. Apple can't survive with Steve Jobs, where it can. And we proved that it could. Harmonic could survive. And we even raised money from existing clients after they left through a drawdown, right? So we could prove that we could raise money, and we were very successful. We launched a UCITS fund, and we were doing really well with some of the investment consultants as well, trying to raise assets that way too. So again, what I would do is when a certain individual resigned the first time, I would have just let him resign. I wouldn't have convinced him to stay, because that created more pain and more negative feeling that basically manifested itself across the rest of the team and made it hard to continue. And it just created a bad vibe. We should have rebuilt the investment team at that point, is what I thought.
As I look back, I mean, you had 6 equal partners, am I correct?
Near enough equal. One person had a 2% more, which didn't really mean anything. It was more of I'll say it's more of an ego thing.
Right. I'm just looking back in retrospect. Was 6 too many for a 25 people firm?
I wouldn't say so. It wouldn't be wrong to have 6 partners, but it's wrong to have 6 equal partners. And it's also wrong to have 6 equal partners that try to make every decision with a committee vote, right? There's got to be responsibilities passed on to certain individuals who make the final decision on certain things. Alistair famously once said to me, just because you can go into a shop and buy a washing machine doesn't make you qualified to, tell me how to do sales. Well, he's right. It doesn't make me qualified. I have an opinion, and he can take that opinion, but ultimately I've got to trust my business partner to make the final decision on sales. And the same thing goes for investments, and the same thing goes for technology. But we didn't. We kind of got into the weeds. We were all very detail-orientated people that wanted to know that every little piece of detail for every decision anybody was making, which was just crippling. 5-hour partner meetings are not good for anybody.
Alistair, how about you? What would you have done differently?
So, I mean, I've developed a few things that Romael said there. So in relation to people getting distracted and talking and then deflecting perhaps their own challenges onto you and then questioning your ability to do your job when then you're already a proven professional. I'd already been in the business development world for close to 20 years by that stage. And so I'd already proven my ability. I didn't need. I could always improve. I could always do things differently, but I didn't need to really justify myself. And I would say if I was going to do something different, I think it is important to back yourself. You know you're probably doing the right thing, and then when you're backing yourself, turn around and say, look, I'll do my job, you do yours, okay? And there's no shortage of things you've got on your desk. So get on with what you're doing, and for example, better technology or making money for your investors. I mean, I really would say that's a big lesson learned. So back yourself. Another one is not to pander to people. If someone says they want to resign, let them resign, and they really do. Just don't go, no, please don't do that. Just say, look, okay, let's work this out. Let's work this through. Or if someone is behaving badly, then just say, look, you've got to stop that. Otherwise, you're going to have to ask you to leave. So the pandering, you think that's helping the situation. It's calming the room. It's better for the relationship. It's not. It's better just to call it what it is and work through the problem. And if the problem is someone has to leave the partnership, then that's the solution to it. So those would be my 2 main lessons. I mean, another one is, it's life's rich experience. As Romael says, enjoy the moment. Don't, it's not going well, but it's what you're learning.
I heard a wonderful take recently. I was listening to another financial podcast, and this guy who was running his fund says, when someone sends me their resume, the first thing I do is look for something where something's gone wrong. And I'll ask them about that, like what went wrong and what did you learn from it?
Yeah,
because it's true. I mean, that's one thing that, life does is you've got to use these road bumps as hurdles to propel you higher. And learning from mistakes is just such a big part of business. So, that's obviously a great takeaway from what happened here.
My teacher says to my son, let setbacks be jetpacks. Really? That's good, isn't it?
That's better than that's the better one. The humps turning into, I should have used that. Okay. I've got my next tagline. So let's just talk about life today, if we can. The world of hedge funds and how it's sort of changing. What do you think is happening in the space? Is it a growing asset class as people look for greater diversifications? Are the business models of hedge funds changing materially from how they started? And they still haven't been around a huge amount of time. I mean, 3 or 4 decades. But how would you How would you answer that, Romael?
I think I'll kind of defer to Alistair in a moment, but from a kind of business model perspective, it goes back to that outsourced resources that you have now. I would say, we went through this period where, every year there'd be a new publication saying it's now going to cost you X hundred million to launch a fund. Now it's going to cost you 150 million to break even to run a business. And then I think the cost started coming down because people started leveraging the outsourced services, be it technology or being individuals, right? So I think the business model there has changed for the better. It allows people to launch themselves, be more nimble, and really focus, outsource everything that is necessary to be outsourced that investors need to a credible team, to then you focus on alpha. So that's a good thing. In terms of asset raising, I think I've mentioned before, that got increasingly harder. As we dipped down and we wanted to try and raise some capital for one of our funds, we realized that seed capital was no longer seed capital. It was really kind of accelerator capital, and accelerator capital was no longer really accelerator capital. It was, late stage investment of some sort. So that's harder. But I think the rest of it, in terms of the current environment, I had aspirations to get to the buy side again. That's disappeared. But Alistair's still very much in the space. So Al?
It's still an exciting business to be in, active management. And I think that to some extent, the pendulum will swing back to it. These markets are active manager markets that we've got at the moment. I think we tipped into more money being passively managed than actively managed not very long ago. And again, I think that's more opportunity for active management. And the opportunity, as you said, to find partners to help you get off the ground and going is increased. You don't need to do it to get all yourself, and investors are not expecting you to do that. They're really looking for your ability to do something different from them that they can't just buy off the shelf. And there's always demand for that. And then one lesson learned, one other point which I think is still important now, is finding a partner. It's fine to try and find a supportive partner to help you grow your business. I think so many people think it's better to have, I'll do it myself, I'll show them I can do it myself. I think having a stable institutional style or a family office, or anyone really that can provide, that you've perhaps sold a quarter of your business to, or maybe even more, who then helps guide you as a sort of bedrock, is massively valuable. And I would always, from my own experience, would always encourage people to find a good partner, however much you think that might cost you. It is always better to have a smaller piece of a bigger pie.
Smaller piece of bigger pie. I'm writing that down. That's me from a dietary point of view as well. Alistair, Romael, it has been so great chatting with you. I wanted to say a big thank you for opening up your hearts and minds and talking us through what must have been a very challenging point in your career. There's a lot of key takeaways I thought I might remind listeners. Outsourcing is a very important part of a startup business. It sounds like now is actually a great time to do it, with so many tech platforms offering good budgets for outsourcing, which means you don't get distracted. Adapt where you can. Not only trust your partners, which is what Alistair was saying, but find the right stable partner to support you. Let them do their job, and they get them to let you do yours. And ultimately, which I think is one of the main conclusions, is I forgot the jetpacks one now. Let setbacks be jetpacks. There we go.
Exactly.
I wanted to make sure I got that in. Anyway, guys, it's been so great. Thank you both for coming on the show.
Thanks a lot.
Thank you, Jamie.
And I'll just say to anyone listening, this is the first in a series of podcasts around the hedge fund world. So if you enjoyed this episode, please do subscribe and follow us wherever you get your podcasts. And until next time, cheerio from me, and cheerio from Alistair and from Romael.